when you talk about the new things that have come in the RBI. More detailed discussion on this would continue throughout the day today. Let's get some market perspective right now. Deepak Jasani is now joining us on the phone line. Deepak, first a view on the market, then we can talk about some stocks. What essentially is happening? Are you surprised by the velocity that markets have recovered in the last few days?
Good afternoon. Velocity, not surprised. The timing of the velocity, yes, I'm surprised. Markets had fallen so steeply over the last 2 odd weeks. So a bounce was anyways due. Now that the RBI policy resulted in that bounce is a little surprise to me.
Right. Why is that a surprise to you? Generally, after events, you do get to, you tend to get markets or, flows coming in or going out. So why is it surprising you this time, or you did not see any major development in RBI for flows to come?
Frankly, we were not expecting a repo rate hike. Now, logically, a repo rate hike should have resulted in a sell-off in the markets. But the markets did not fall, and in fact, they rose. Now, why did they rise? Now, there could be a few reasons why they rose. One is that some of the participants had expected even a 50 basis point repo rate hike versus that a 25 basis point is better. Secondly, RBI maintained a neutral stance, which is again welcome by the markets. And RBI's commentary on bond markets, banks and realty was also taken positively by the market. So, all said and done, I think these few reasons have resulted in the markets rallying. As a matter of fact, bank stocks could be impacted negatively a little due to this because of some various provisions, except the MTM space over. Despite that, they are doing well. So one event is out of the way. I think that is what the market is looking at.
Right. You like the banking space still? What's the reason for that?
Yeah, we like the BFSI space, basically, including the NBFCs and the insurance companies and all. So now, why do we like banks? Banks, basically, the better run retail banks is what we like. Most of the loan loss provisions have already been made. Now, I think very few provisionings would be left. And because of that, the NIMs could expand going forward. We are a growing economy. The demand for funds will continue to grow. And in a rising interest rate scenarios, the lenders will typically see expansion in their NIMs. So this could be the reason why I think the banks could continue to do well and could outperform the other sectors.
Thank you so much for taking out time for us. Always good to get